So this is weekly commentary 35. Now let's go into the weekly chart first. So we anticipated a move higher on the weekly chart. However, we didn't get that. Now the week was actually a sideways week. I would not class this as a down week. Although that the candle is downwards, this entire move was on the Friday, right? The Monday, Tuesday, Wednesday, Thursday, and most of the Friday until the end of the Friday. It was a sideways week, right? From the weekly candle, though, we can see that it was a down week. And where do I expect the next weekly candle to go to? I am gonna sit out for a few days of next week. Now, why is that? What do you see happening on this weekly chart? The last four candles, right? What do we see? One, two, three, four. Move higher, move lower, higher, and lower. It's clearly consolidating, right? Now, let's understand something, right? This is the economic drivers for the week coming. So tomorrow, right? This is Sunday right now, making this weekly commentary. It is currently, you know, 6. Market opens in 4 hours, right? This is the news drivers for this week, right? Look at the amount of news drivers we have for Euro Pound and USD. And then they're also more significant drivers if you look at the names, right? You have consumer confidence on the Tuesday. On the Wednesday, there's nothing really much for USD. For Thursday, we have Euros MPS, right? And we have the USD's GDP. This is something that you want to watch for the S&P as well, trading the S&P. And Friday, we have the core PCE. Now, that's this week. Remember, there is a lot of drivers this week. Now, let's look at the last week trading. So from the Monday, we had one red folder, and it's not as significant as the ones coming next week. Remember, we have GDP and the core PCE, right? And I believe we have the consumer confidence as well, right? That's one. And then on the Friday or Thursday, yeah, we had the Philly Fed, right? Now that was a lackluster week for reasons to push price. There's not really many folders, no significant ones as well. So let's put that into a narrative. Let's look back at the chart. Now let's look at the daily for the people that don't understand what I said about the weekly candle. This was last Friday, right? This was last Friday. Monday, Tuesday, Wednesday, Thursday, and Friday. You see Friday done the entire move of the week, right? Now Friday is usually a day that I avoid. If you guys speak to me often, you know I say I don't trade the Friday, right? The Friday was the one that delivered most of the range. You see from the Monday to the Thursday, it was a pure consolidation. It still is a consolidation, right? You see Friday still within this range, right? Now, when I see a consolidation, the reason I stay out is this. I view a consolidation in the market like this. It's like a rattlesnake. Now, what does it mean when a rattlesnake shakes its rattle at someone? It means stay away from me, right? That's what it means. It's the way of the rattlesnake to defend itself from an altercation, essentially. Now, I view this consolidation like a rattlesnake, the market maker telling the more informed traders stay away from trading me. I'm not to be traded. And why is that? Because a consolidation period is not for trading. It's for accumulating orders. It accumulates longs and shorts. Now we're going to go into a big context here about what type of orders and the move away. What can we expect from the move away from this consolidation? And I'm going to show you using barchart.com how we can use the COT data to analyze a consolidation further, right? But let's use the idea of what we touched on Forex Factory's calendar. This week that we just went through, that week's trading, was there reasons to push price? No. But the next week has all the reason to push price. So what is that week likely to do? Right now, you see on the Monday and the Tuesday, I was expecting a midweek reversal, and you see Wednesday had it, and then we went back into the range. I knew straight away it's consolidative, and I'm not gonna touch it, right? Because from Wednesday, I wanted to see Thursday carry on the move higher and take out buy side liquidity, but we didn't get that. Now, what does that mean, right? When you trade down into a liquidity pool, like a sell side liquidity pool, and then you move away from it, but it's frigid in attacking buy side liquidity pool, that means that it's accumulating the orders, longs and shorts on top of the range. Even for my free content, this is touched on. There are ranges built up until news drivers. Now, on the intraday level, right, within the day, let's say it's a Wednesday and there is a news driver on that Wednesday at 1:30 New York time, which is the usual time for USD news events. What do you expect to happen in the build up of that news event? Remember, we expect a consolidation to occur in the build up of that news event. And that's for intraday. So let's take that a step further. Let's go up a few time frames. On the higher time frame, on the daily, we see we're going sideways, right? We see we're going sideways. Now, this week, there's no news events. Next week has all the reasons to push price, and the week after as well, by the way. November the 2nd is FOMC, and they're going to talk about changing the rates. And that's the last one for the year, right? Now, is this week making more sense to consolidate or the next week? Right. Now, put it like this. You have a week with all the news events and a week without the news events. Which week is likely to consolidate and which week is likely to expand? Remember, I think I've touched on this on a weekly commentary before. You look at the monthly candle. Use the weeks on the Forex Factory candle. Look at each week's news, right? You will see that at the start of the month, there is always the NFP, right? And then you'll see there is a week in the middle of the month, which we just passed, and it will have a lackluster of news events. Now, that is usually the accumulation period in that monthly candle, right? And then you'll see towards the end of the month again, we have all the GDP news that comes on the core PCE. It's the same news events every single month. It's timed for that specific reason. This is why the market is so repetitive. If you didn't know why the market repeats itself so often and why these quote unquote cycles of the market happens, consolidation, expansion, reversals, it's because of the way that the economic drivers are placed in within the month. Look at it for yourself. It's the same thing every single month. Now, we consolidate the entire of this week. Now, a daily consolidation, and it's been prolonged. Look at how many candles are within the range, right? There's like 10 candles at least. The expansion is going to be likely to be in the next 2 weeks. Throughout the 2 weeks, we're going to see, a some sort of aggressive move, a swing. Now, there are many news events, right? Let's go back and look at it. And this is particularly the reason why I'm going to stay out as well. This one I'm going to share with you is the biggest reason I'm going to stay out. There are many news events. Look how many news events there are. It's not like there's just one. When there is just one driver, it's very easy to anticipate in the build up what that news event is likely going to do. For example, if there's one news event in the day and we have only attacked sell side liquidity, and now we are consolidating underneath lows in a bullish narrative, it's likely that news driver is going to lead up to the reversal to go higher. But what about when there's many news drivers? This is when I don't trade. Why? Because it's likely one news driver is going to send it one way, then another way. It's going to swing both sides. Most of the time, it will swing both sides. It's very rarely that both news drivers are just used to just send off price in one way. And guess what? If it is used to send price off in one way, there's two news drivers in one day. It's very hard to be a participant in a one-way move. We need retracements. We need that move down, that Judas swing essentially, to be a participant within the market. So when there's many news drivers, it's very hard to tell because it's likely that, the Monday is going to trade one way. Tuesday is going to, we have news drivers there, right? Do you see the point I'm trying to make? It's very hard to get a gauge on the market when there's many news drivers and many reasons to manipulate the market, right? This is where sitting on your hands help. Now, for the people that just want to participate, and a lot of you are learning, use a demo account. I've traded this year, and I'll tell you exactly how to achieve longevity in this market, in this industry, sorry. You need to know when it's time to trade your real funds and when it's time to cut back, right? Take a break is one, and also fall back on paper trading. Because paper trading, it still emulates real trading. I'm still going to be practicing. I'm still going to be making sure that I'm not going rusty. I'm keeping the sword sharp. But it's not hurting my real funds. This is how you stay in the game for a long time. Because trading a week like this can hurt my real funds. Because it's a time where I'm, less certain of where price is going to go. Now I could dial the risk all the way back on my, you know, my capital that I trade. But why not just fall back onto a demo completely and I can, trade it freely and it's not going to hurt my real capital. This is how you achieve longevity. And this, right, is what I mean by it goes way further than just technical analysis. This is how you stay in the game for a long period of time. Now, I don't know if this is boring you guys, but I really hope it's not boring you because this, right, maybe in a few months, I know the guys that have been with me for months, this is the type of stuff that you want to hear. Because the technicals, if you've been with me for a long time, 35 weekly commentaries, sometimes we don't touch on these things enough. And I wanted to just reinforce the idea that it's not always the technicals that you need to worry about. You need to know when to sit on your hands. And this is a time when you want to sit on your hands, right? Now, what did I want to see in the week? Let's go on the Euro and understand it a bit better. So, do you remember last weekly commentary? You can rewatch the start of it. And we said that if, Monday shows that it's going to willing to trade higher and create that Judas week, because the way the weekly profiling works, right? On a bearish week, if you haven't done chapter 3 already, on a bearish week, we don't expect every single day to be a bearish day. We have one or two, right, days where we want to trade higher and create the high of the week. And our job and our objective as a day trader is where is that high of the week likely to be placed in for my bearish bias. So I had this weekly fair value gap marked out. Do you remember from here to here? And I said if Monday shows it wants to trade higher into it, and we can go into this fair value gap. You see from here to here, it went a bit higher to it, but it didn't overshoot it by much, right? And then Wednesday we displaced. Now let's look at it without this. So this is what it was. This was the weekly fair value gap. Now let's go on to a 1 hour chart. So this, right, the lines, this is Monday, this is Tuesday, Wednesday, Thursday, and this is Friday. Now, Monday we moved up higher into it. And look at Tuesday. Tuesday, the entire time we are consolidating. Now, on the Snapchat private story that I have for you guys, I said Tuesday night, on the night of Tuesday, I said, I want to see 1 hour displacement happen downwards on Euro USD, right? And we had that in the London session. In the London session, there was pound CPI. Now, in the last weekly commentary, what did I touch on? I touched on the fact that the pound's economy, right, the British economy, the UK economy, sorry, Euro, and the American US economy, they are very intertwined. The inflation stats of the pound will ripple through and affect, the DXY USD, right? This was the reason it actually moved down lower, right? Because remember, Euro GBP as well, Euro and pound, right? And we got that 1 hour displacement. And now, why was I hunting that? Why was I hunting that midweek reversal? Now, let's touch on weekly profiling here. Bearish week, that's what I anticipated for Euro USD. Remember on the last weekly commentary, I said bullish DXY, right? And you see that Friday was the entire move up and down, right? Look how many down candles, 1, 2, 3, 4, big down candles moving one way, right? Now back to Euro. Monday trades up higher into that higher time frame PD array. We're now premium, right? And we're inside that fair value gap. Tuesday consolidates. Now, when Tuesday is consolidating, right? When Tuesday trades above Monday and comes back and starts consolidating, that tells me, okay, we're in the premium of a bearish market on the higher time frame. Premium inside of a bearish market and we're consolidating. What orders are we likely to consider inside of the premium, inside of a bearish market? Short orders, right? Now, that's why I'm hunting the midweek reversal on Wednesday. I want Wednesday to trade down lower because we traded up into the higher time frame PD array. That's where we want to see the high of the week likely to be made. Now, it shows clear consolidation and displacement away. That's why I was, anticipated, the bias to be correct. And you see how Friday flipped the bias, right? Thursday came back into the range and offered. This is a one shot, one kill, right? We're using the OTE using the days of the week. High of the week, current low of the week. From this high, sorry, to this low, that is an OTE swing trade that you can use. Now, talking about swing trading, You see, understanding that from here to here can offer a swing trade opportunity. Within the swing day opportunity, because you know that this is likely to offer a swing trade, you can find scalps inside there, right? And then we displace lower. And from here, I thought that we're going to start moving lower, right? Because of this OTE from here to here. And then it just came back in the range. That tells me now to stay out of the market because it's taken buy side liquidity, took sell side liquidity, and now it's back into the range. This tells me to stay away. But do you understand how I use this to build a weekly profile? You want to see early in on the week a move up higher, or for a bearish week, a move higher, right? Now, if Monday didn't trade into that PDA rate, let's say Monday only got to this candle. I want to see Tuesday carry on that move into the PD array. Now, if Tuesday New York trades into that PD array and rejects, then we can expect that that's the high of the week. And that Wednesday will carry on moving lower, Thursday and Friday move lower or come back into the range, right? That's how you use weekly profiling. It's day of the week. And when the day of the week trades into your higher time frame PD array, that's when you can frame your reversals, right? And where your high and the low of the week is formed. This is very, very key, right? Now, touching on the idea of a consolidation, what type of orders are they likely to accumulate? This is the next question that the trader has to ask, right? So using barchart.com, right, we see that if I just use candlesticks here, and if you're new to the mentorship and you're like, what the hell is this? I never knew this existed. This is taught in chapter 5, lesson 1. It's a real, real way to gauge which type of orders are being placed into the market for the specific market we're looking at. So this is the Euro USD, right? Now we're looking at the red line. The red line shows quote unquote smart money, right? What the bigger players are doing, the commercials, this is what they're called. Now we see that what's happening is consolidating inside of a premium, right? Remember all the technicals that we just touched on, consolidating inside of a premium and overall bearish market. And the net position is short, minus 70k, is beneath the zero line, and it's actually being built, right? You see from the 9th, right? I mean the 19th, sorry. You see they're actually piling in more net short positions, but the market's consolidating. So what's the big players doing inside of this consolidation? They're accumulating what type of orders? Short orders, right? So this straight away tells me, okay, I know I'm consolidating, but I know which way the move is likely to break out. Now, whilst we're consolidating, you want to keep an eye on this position being built. You want to keep an eye on that position because that's going to tell you as the trader which way are we likely to break out, right? Now, it's net short. This is helping me build a profile for Euro USD. Premium of the market in an overall bearish market, high time frame PD array, consolidation with a net short position on the COT data. Now, of course, there can be a run on buy side liquidity, right? What I'd love to see is you see a move higher. I want to see a move higher, preferably when I'm bearish. I want to see a move higher on the candles, but I want to see the net short position build. Why do I want to see that? Because it shows that they are running buy side liquidity. They're running highs to what? Fund their net short position. Essentially, it's, a quote unquote bull trap. They're pushing price higher. They're tagging in all the buyers whilst to do what? To offload their short positions to the willing buyers above the highs. That's how smart money let off and offload their positions. They need a counterparty. So what they do is they're finding the counterparty for their net short positions above buy side liquidity pools, aka highs, right? That's that for the technical side. Now, what am I going to do? I'm going to sit on my hands. That's what I'm going to do. I'm going to sit on my hands and I'm going to wait for a clear way. Who wants to trade within this, right? Now, the reason I haven't touched on Bitcoin for many weekly commentaries is look at this, for example. Look how small the majority of the candles are, right? Now, this hourly chart does not look much different to what the daily chart looks like. The daily chart is, of course, it's fractal. It looks just like this. Look at it. It's just one big consolidation, one massive consolidation. Now, November 2nd is FOMC, and we have many news drivers. Now, let's talk about the FOMC. They're likely to, increase the interest rates again for the US economy. So you see, next week, if we trade down lower, that wouldn't make me change my bias at all. Because remember, the higher time frame bias that I get is from the position of the interest rates. What is their stance on interest rates? Are they trying to increase them or decrease them? Because that's what's going to change, the price of their currency. So when I see the DXY move lower, if I see it move lower next week, I know FOMC is following that week. So it's likely they could run it lower, and the FOMC is the reason to distribute, like an AMD pattern: accumulation, manipulation, and distribution, right? Now let's touch on how to trade the range. You need to identify the range that you're in. So what I do is, for example, you have a daily, right? Daily high, daily low. This is what we're in. We're in here, we're in here. We're inside of this high and we're inside that low. We all agree. We're all inside this high and we're inside this low and we're consolidating inside, right? Now, what do? I come to the 4 hour. This is where I like to use the 4 hour chart. We have this high and we have this low. What you want to do is this, and I touched on this in the Telegram GC, but I know a lot of you aren't in the Telegram GC, and that chat can get very cluttered. Just to touch on that quickly, I'd like us to be a bit more serious on the chat. There is going to be no bias sharing. There is going to be no chart sharing inside of session hours. You can help each other build a narrative. Narrative is built by words, not by pictures. You can help each other out, or possibly 4 hour fair value gap. The way I help you build a narrative. There is going to be no positions sent into that chat. We're not doing that anymore. We're not going to create a dependency for the new guys. Everyone is here to help themselves. That's the mentorship. I don't tend to people that want it quick. I have many people messaging me to join. Believe me, I have many people messaging me. And I just tell them straight away. I can tell who is serious and who's not. Because I see the guys that pop up to the story when I show the GC performing well and they say, oh, can I join? They only want to join because they see you guys, sending each other charts and whatnot. And I know the reason they want to come, just to get off the back of your guys' hard work. And I tell them, no, the only people that can make it is the guys that I can tell want to better themselves only. And it's very easy to see who's done that after you trade for many years. You can tell a lot from someone from a first impression. Anyway, sidetrack. When we have our range built, right? So we have this high and this low. I like to use just this 50% line. Because what's that? That's equilibrium. Above is premium, beneath is discount. Now, what you want to do is have your 4 hour PD arrays marked out, right? So we have a fair value gap here, right? 1, 2, 3 candles make one order block, right? If you're struggling to see, that's an order block. 1, 2, 3, 4, right? And the displacement away is what confirms that this is an order block, right? And just run on this high right here. Now, there is also this, breaker block, this low, higher high, lower low. And we have a bit of imbalance above here. And what do we have in the discount? We have this, right? Mitigation block. We have this fair value gap, right? And of course, we have the sell side liquidity pool here and sell side liquidity pool here that was snatched as well. Now, how do we trade the range? Inside of the range, when it's consolidating, remember, it's accumulating orders. You need to make a big distinction. Are we generating liquidity or are we delivering liquidity? This is the thing you need to be able to distinguish within the market. Are you generating or delivering? If you're delivering, which is clear, right? Because you're delivering when you trade up in a bullish market, when you trade down into a discount and you displace away from it, and you're clear, you're, for example, like a market maker buy model, you know that you're delivering liquidity. Now, in a consolidation, you're generating liquidity. So do you expect external ranges, right, like this high to be taken inside of this consolidation, given that there's no reason to exit the consolidation? Because remember, when are we likely to exit the consolidation? When there is a news driver, there is a reason. That's all the news drivers are. They are reasons. I don't care about the numbers except for the interest rates. I don't really care about anything else. Interest rates is the only numbers that I really care about, right? That's why I'm banging on about November the 2nd FOMC. Now, when we're generating liquidity, we aren't delivering liquidity. When we're delivering liquidity, we can expect the external ranges to be delivered too. When we're generating liquidity, we're not we're not going to hold trades till the external range. What we're going to do is this. Now you can trade both ways inside of the consolidation, but this is how you have to do it, and you cannot marry your bias. 4-hour PD array, you hunt here. I'm not saying you enter off every array. Remember, listen to the words I'm saying. You have your 4-hour PD arrays marked out. This fair value gap, there's this breaker, there's this imbalance in this candle, and this order block. You're framing the trade from your discount PD array, right? Let's say you find an entry in the 15-minute or the 5-minute chart. Where are you holding to? The next opposing PD array inside of the premium. So you go from discount to premium. You'll hold a trade and you TP. You're not holding for the highs because you're in a consolidation period. Remember, that trade can reverse on you very quickly inside of a consolidation. It will wick and just come the other way down and it will go back into the range. This is when you cannot marry your bias inside of a consolidation from 4-hour PD array to opposing PD array. And then you can hunt from there and see if it's going to push back down into the discount. Now, let's add a bit more narrative to that. The narrative is if you're bullish DXY, you want to try and be a bit more cheeky with the longs that you take from the discount because you know that which way is it likely to, quote unquote, break out of and expand in. Do you see the point I'm trying to make? So if you're more likely to expand to the upside of the range, then you could try and maybe hold that long for a bit more. But as soon as you get the rejection off a PD rate, just cut the trade. It's not worth it. Take the money and go. 2R, 1.5R a day, that adds up. Believe me, there are guys in here funded and they done was listen to me. There has been some guys and they had the pure benefit. They picked up Forex with me. They literally picked up trading with me and I promise you they are funded. They are funded traders, right? And a lot of you know who the person is. You've spoken to him, so you know I'm not lying. He picked up trading with me and I told him, don't listen to anything else you see online. Listen to me, right? And I told him 2R, 3R, you're out. Because you can get in a trade from here. And up here could be maybe 6R, 7R. Maybe here could be like 2R. Is it likely to reach there? No, it's not. So holding for the 6R, coming out, breaking you out, hitting you out break even, sorry. Is that what you want? No, you want to take 2R and cut. Because the reason is this. 2R adds up. Hit 2Rs a week, right? And that will add up. The thing is, maybe you're not content because you don't understand and you haven't seen what 2R does. Believe me, the guys that are on funded account, go for your 2R trades, see how many of them you get a week. See how much money you make from those 2R trades. With real accounts, see how much money you make from those 2R accounts, from those 2R trades. You're gonna see that this is the way, right? I'm in and I'm out and I'm making money. I'm not holding trades and stressing myself out, right? Now, from the discount of the range, you can probably hold for a bit longer, assuming that there is a news driver, right? I'm not saying, oh, as soon as it goes to this discount, it's going to break the range. No. Remember, if it trades up into this discount, right, you're in discount, and, it's coming to the middle of the week, and there's news drivers in the week, remember that we touched on at the start of this video, it's likely that if those news drivers push higher, that's going to be the reason to start breaking the range and start moving away from this consolidation, right? And that's how you have to start framing it. This is how you trade a range. Now, you want to only trade this style when the consolidation is big. Thankfully, on the DXY, the consolidation is pretty large, right? From 11478 all the way to 110, right? That's a pretty large range, and we can work within it. There's many PD arrays that we can use to frame trades from the discount to the premium of the range. Just to reiterate this, because I don't want you guys to get chopped up. If you are participating, I hope you're participating with fake funds, right? Demo accounts specifically. You're trading from the premium to the next opposing discount array. Then you can hunt if you're in the premium array and you see that there's signatures to go lower and you're in a short, you're taking profit at the next opposing discount array. You're just playing back and forth with this 50% midline. And you're going to see it's very common that the consolidations occur at 50% of the range. That's fair value. They're accumulating orders at fair value, longs and shorts. Now, remember, we touched on the entire context and narrative of this consolidation using barchart.com. There is a net short position being built inside of this range for euro shorts, right? So just the last thing I want to touch on that's on my notes for this weekly commentary, right? I want you guys to start getting comfortable with the idea of executing. Remember, that all a back testing is for. Back testing is for this. It's for practicing my content. The content I've given to you guys, I promise you it is enough, firstly. You don't need anyone else to help you. Everything I have here is enough, right? Everything in this mentorship, from the top to the bottom, is structured in a specific way for your development. Now, if you want to skip videos because some titles look nicer than others, by all means do it, but you're tripping yourself up. I know how it is as a new trader. You want to get to the good stuff straight away, but that stuff is only good for you once you know other things prior to it. Common sense, right? Now, some of you have the problem, I can't execute and I can't hold my trade. Now, I'll tell you this, it's very common and it's something to not, get upset about. Trading is not easy. There's a lot of emotions and a lot of mental psyche involved. Now, as long as you're trading your plan and your risk is managed, what's the worst case that happens? You take a managed loss, which doesn't hurt you because it's managed and you risk whatever you're comfortable with. Now, if it's the fact that you can't execute, the problem is probably that you're too attached to the number attached to the trade. So what I recommend, and it worked for someone in the mentorship, he's doing, he's better now. I told him trade a 0.01 lot because perhaps it's not the idea that losing the trade is going to hurt you. You're scared of the money associated and you can't keep your eye off the P&L. Now, he done that and now he's more comfortable executing because that shows that it was the money attached to the trade and not the actual idea of taking a loss because we're going to take a loss. If you can't take a loss, then trading isn't really not for you. And I'm sure everyone here is very capable of taking a loss and shaking it off and going on to execute the plan. Because the truth is this, once you learn everything and you know how the things work that I've taught you, it's about executing forever, flawlessly, right? It's about keeping the right state of mind and executing your trade plan. That is what it comes to in the end. Taking everything I taught you, develop a trade plan and an understanding of how price delivers. Now, you're going to take losses in your trade plan. No trade plan is foolproof, right? Everything takes a loss. But the thing is, the losses are managed, and you should be winning more than you lose more, right? And if you lose one, your risk to reward ratio should make up for it. Now, when I say risk to reward ratio, I don't mean your crazy 10R. I mean just a 2 to 3R makes up for losses. Win one, lose two on a 3R, and you're still making one trade, right? Now, get comfortable with executing. A lot of you just sometimes it's this. If you see yourself not taking enough trades, maybe your trade plan is too specific. Now, it's very good to be, specific with the trade that you're taking because you don't want to take any rubbish setup. But there is a difference with being over specific. I'm looking for this order block at this time of day with the why just rely on the order block? Why not just say I'm looking for a premium or discount array? Why do you have to be specific to the array? This is why I taught you all of them. Do you see the point? This is why I taught you all of them. So that then you can just say, when I'm short, I'm looking for the move down into a premium array. And then I'm going to look to frame entries off that. Now, if it's only the premium order block, out of all the arrays I taught you, there's six of them. I believe there's six of them, right? There's order block, there's rejection, order block, fair value gap, breaker, mitigation. So it's five, right? If you only rely on one, that's 1/5. But if you rely on all of them, you can frame a trade-off of all of them. Do you see the point I'm making? Maybe you're too over-specific, some of you. If that is, maybe refine your plan and trade your plan consistently, right? Don't measure yourself day to day trading or even week to week. You need to measure yourself month to month because if even me, if I measure myself day to day trading, some days I would be an absolute failure, and then the next day I'll be on top of the world. What does that show? Inconsistency. You need to measure yourself like month to month basis because within the month, think of it like the candle. You can have maybe a Judas swing down, but then you perform well throughout the month after that. That's why you can't look at it day to day. Remember, when you get in the mindset of it's about what I'm doing month to month and year on year, you're not going to fear taking that loss day to day. Because if you're in that day to day mindset, when you take a loss within the day, you're going to let that loss kind of define you. You can't do that. When you have that long-term mindset, I'm looking at month on month, quarter on quarter, year on year, one loss within the day, it won't even phase you. That's the kind of mindset you guys have to get into. Just before we actually cut the video, same thing with US 500, right? 4 hour clearly consolidating. Now, if I go to the daily chart, you see it's a range, right? Look, we're going just going sideways. It's the same thing. You're waiting. Remember, I said we have GDP. GDP. What does GDP show? Gross domestic product. It kind of is an economic indicator of how well an economy is performing, right? Economy performs better. It's good for stocks. This is the fundamentals behind it, right? And then the technicals will start pushing towards it. You're waiting for GDP, but now we have two things that are, they're conflating, right? They're conflicting, sorry. We have GDP, and then the next week after that, we have FOMC. So what about if we have a good GDP but a bad FOMC? This is why I'm outside of the market. You see, there's too many conflicting factors going on right now. No clear direction. There is no bias. There is no bias inside the consolidation. Yes, some people will win. You're going to see on social media, people will win, and you're going to think this guy's the man. I promise you. Ask them for a track record. How many other track records have you seen in this year? I'll even put this out there right now to you guys. You won't see another track record this entire year of 2022. I don't even know if you'll see it in 2023 from someone else. Because you're looking at social media, this guy and that guy, it's very easy to show you the trade that they took. For example, let's do it here. It's so easy right now for me just to go like this. Order block, stop goes above here, TP here. I take a snapshot of this, or actually, let me just say I just hold for the range here. Right here, yeah. 5R. I can post this on my Snapchat right now, and everyone think I'll take the trade. I just put this right now in front of you. That is how easy it is to fool people online, right? And everyone only shows their winners. No one is going to be out there to show you losers. Oh, and some people are smart and they understand this. Those marketers are very smart. So they'll show you one or two losses and say, hey, I show my losses too. But do you? Do you show your losses really? Would you it's semantics, right? And I don't want to bang on about it in this video because all of you are very aware of the games that people play online. And a lot of you say, oh, I see this guy, he took this trade, whatever. Don't worry about that guy. Don't worry because you don't know how many losses he took before that trade. It's very easy to only show winners, right? Focus on your own trading. I want to put this out, the last message. The people that do very well with me, the people that have done very well, they're not on the GC very active. They are in the GC, but it's muted. And the reason is this. They say it's a solo game, and when I was by myself and I was studying and trading and I moved away from the GC, I saw myself progressing a lot because I saw myself wasting time. The GC is as good as you make it, right? Some of you use it productively to ask questions and ask people for help. That's good, but it's very easy to become unproductive on it. And this is me saying about my own group chat for my own group because I want the best for you guys. I don't want you guys just to talk and it hinders your trading and your education. I don't want that. I want you guys to treat it like this. Get your stuff done, get your work done, let the trading day finish, trade, learn. If you take a loss, reflect on it yourself and then use it as a means to talk and mingle amongst yourselves, right? So that's going to be it for the weekly commentary. It might have been a bit of a boring one because of that. The market's not offering much, and I'm not going to force a narrative when I don't need to force a narrative. This is trading, right? So until next time, and I'll see you guys in the next one.